So good morning, everyone. Thank you for coming out today, this Thursday. I am Brianna Rossa, the Office and Events Coordinator for the Small Business Center. And today here, we're going to have an intro to commercial insurance. Our speaker today is Matt Doty. He is a commercial account executive with Whitley Insurance and Financial Services. He helps clients uncover challenges and build solutions for their current risk management programs. His approach is different from many others in the industry, and it allows them to identify and address clients' concerns with creative and unique solutions while taking into account costs, providing the clients with personalized service. And I'd like to introduce Matt Doty.
Hello, everyone. Thanks for joining us today. I was saying to Brianna that hoping to make this kind of as interactive as possible. And it looks like we have 6 or 7 people involved. So, please feel free to turn on your cameras and, turn on the microphones and ask questions as we kind of move through. I'm going to be kind of pointing questions towards the group and seeing what you may or may not know or understand about the insurance world, and see if, like I said, if we can get people talking, then it generally makes things a little bit more interesting than just me speaking for 30 minutes, 40 minutes. So we'll get started here. So basically what we're going to be doing is a brief overview of a bunch of different areas in the commercial insurance space, and an introduction to who I am and who our organization is. So for myself, my name is Matt Doty. I have been in the insurance industry for about 7 years, a little over 7 years now. Prior to insurance, I was teaching overseas for 10 years in South Korea. After university, went over there and ended up staying for 9 years longer than I thought I was going to. Really enjoyed my time, but came back with a wife and my son, and have been living in the Quinte West area for about 7-8 years now. I'm the past president of the Trenton Kiwanis Club. Just finished up the presidency this year, which was a challenge, as most business owners know. We kind of went through everything as well with COVID and not being able to do any of our fundraisers, and the big fishing derby that we generally hold, which would have been next week, and is unfortunately canceled again this year. I'm also a board member of the Quinte West Chamber of Commerce, and the current treasurer as well. So I guess the who we are, we are Whitley Insurance. Whitley Insurance has been in this area, the Quinte West area, for a lot of years, and is one of the most recognized names in this area for insurance. About 5 years ago, Whitley joined in with Navicord, and Navicord is now becoming like a national brokerage. We have representation in just about every province. We have licensed brokers in every province and able to write from coast to coast. In totality, we're about the 4th largest commercial brokerage in Canada. When you look at Navicord itself, you'll see at the bottom we have several of our taglines. One is building the great Canadian brokerage. We kind of think outside the box compared to a lot of the larger commercial brokerages, in that we are local touch, national strength, which means we have smaller brokerages that are based in smaller communities, and we keep that same feel as there's always been, but we have the strength of a national brokerage, which means we have access to a lot more markets than most brokers, and we have the strength of a huge amount of premium that we run through on an annual basis. To kind of get an idea, Navicord does about $2 billion in premium a year between all of our broker partners from coast to coast. So I guess the first thing we want to kind of talk about is, what is a broker? What is an agent? So that there are two different things in the insurance world. Does anybody kind of on the line know what the difference between the two of them might be? Brianna? No? All right, so a broker is what I am. A broker works on behalf of our clients, and we represent a number of different insurance companies. So when you have a broker, you know, we're not the insurer, we're kind of more of a middleman, and we go to in our case, we have access to well over 50 companies that we can go to and request quotes from. And that is the big difference. An agent, they're also called a direct writer. They direct to just one company. So, you know, the examples are there to have theirs, like Cooperators, Desjardins, TD, those insurance companies that they actually only represent that one company. So if there are issues, you're stuck with what they have at that point in time. The difference is if you're with one insurer with us, and let's say your premiums go up, or there's another kind of issue, you don't like the service that they're providing, could be anything, then we have a lot of other companies that we can shop you around to and find a better solution that will help fit your needs. A broker is subject to a code of conduct and regulated by RIBO. All brokers must be licensed to sell insurance and even to give advice. So if someone's giving you advice on insurance, they have to be RIBO certified. Every broker has to be protected by an errors and omissions policy. So that's if we make a mistake, there's insurance for us. And we also have to continuously learn, and we have to complete 16 hours of education on an annual basis through things like this, like accredited webinars, where we can get our education points for. Another point is in terms of a big difference that we find between an agent and a broker is when it comes to claims. An agent generally works for the insurance company. So sometimes you kind of question, you know, is someone going to really go to bat for you against their boss? Which is what essentially is happening when you deal with a direct writer. When you deal with a broker, we're not affiliated with the insurance companies. So for us to fight on your behalf to help with a claim is something that tends to be a little bit easier and a smoother conversation. Does anybody have any questions in regards to kind of what the differences is between an agent and a broker? Nothing? All right. So the next part I just want to talk about is, sorry, I'm just going to sip water. Now, that's something that I was just speaking to Brianna about is we're currently in what they call a hard market. This is in the opposite of a hard market, is obviously the soft market that you see beside it. What happens in a hard market generally is that your premiums go up. There's restricted coverages, tougher underwriting, reduced capacity. Insurance companies are actually leaving the markets, and renewals are not offered. This happens for a number of reasons. It's been happening for a couple of years now. There are some initial indications that we might be starting to move a little bit back the other way, but we're probably still in this kind of market situation for at least another year, 6 months, a year, maybe even a little bit longer. And what drives this is the profitability of the insurance companies for the most part. You can find online where the insurance companies are and how they are doing financially. At this time, a lot of insurance companies are actually running in the red because they are paying out more in claims than they are bringing in premium. Generally, insurance companies make their money in two different ways. One from the premium, and two is the investments. And right now, the other piece that's driving the hard market is that with interest rates being where they are, the insurance companies are not making money off their investments either. So it's a bit of a double whammy. So what ends up happening is that money has to come from somewhere. So it generally comes from increasing premiums. So that's kind of what we're seeing right now. And the opposite would be the lower premiums, broader coverage, easier underwriting, increased capacity. So if anybody has been going through either a renewal process right now or trying to get insurance for the first time, you might notice that there's a lot more questions these days. The applications are more complicated. Instead of just being, I'm opening up a carpentry business, I'm opening up a plumbing business. I've got 5 years experience with this, with a bigger company. I'm starting off on my own now. I need to get insurance. And before, it used to be fairly simple like that. Now they are a lot tougher. Insurance companies, some of them don't want anything to do with a company who's just starting up. You can have 10, 15, 20 years experience in a larger company and then starting your own company, and they will decline the coverages or to quote for you, basically because you don't have 3 years experience running your own business. Hopefully, as the market softens up, more companies will be more amicable to provide coverages for new businesses, but it can be a little bit tougher right now. So different things you can do to help is being proactive with your risk management instead of being reactive, staying on top of what's happening. If you let's say, for example, if you have transportation company and you have a fleet, staying on top of your fleet and your CDOR and making sure that it is as clean as humanly possible. If you have a small business, having standard operating procedures in place so that you and your employees know exactly what to do in most or all scenarios. The insurance companies love to see that people are very proactive with their risk management. Early review and submission to markets. We like to try to get out to the markets 90 days ahead of a renewal. When a broker, like when we reach out to our clients, it's not to harass or annoy you with all these questions. It's what we're trying to do is we're trying to help you, help protect you, and help find the best rates possible that we can for you. In order to do that, we need to get as much information as possible. And again, going back to what we said about the hard market, the insurance companies, they want to see high levels of detail. And that's why we're asking all the questions. It's not, we're not trying to intrude in your business and stuff like that. Is we need to have a deep understanding of what you do and how you do it, so we can paint the best picture possible to the insurance company so that we can get you the best terms that we can. Quality information, including updated projected revenues. A lot of people don't realize it's quite often we'll ask someone, what are your projected revenues for the year? And there's some people's responses, it's none of your business. Unfortunately, I guess in this case with insurance, it is. A lot of what your premium is based on for your liability is based on what your revenues are anticipated to be. The theory behind that is that the more revenue that's coming in, the higher the exposure. So if a clothing store is doing $50,000 in business a year, that means that they're having $50,000 worth of foot traffic into their store, which is that X amount of liability that's there. If someone's doing $500,000 in sales, they're obviously having a significantly more people into their stores, which is increasing that liability exposure. So that's why the insurance companies want to know what your projected revenues are. It's very important to how they calculate your premiums on an annual basis. Certificates of insurance for contractors. This is quite common. What it is if you're a contractor and you have a sub, you want to make sure that both people are named on each other's policies. This doesn't cost anything to either side. And what it does is it protects you if you have someone working for you and it's their work that causes the issue. You're being named on their policy will help transfer that risk over to them, so that their policy is the one that's going to be paying out and not yours. And the last thing that I say, it's incredibly important, I think, is that your broker should be a trusted partner. A lot of people look at insurance in a fairly negative manner, as a necessary evil. And I think that kind of, kind of having your back up against the wall about those kinds of things and the questions that are being asked to get your coverage, you need to trust that the person's doing the best thing for you. If you don't have that kind of relationship, you don't have that kind of trust with your broker, then maybe it's time to look for somebody different, because that's really incredibly important, that you can pick up the phone and that they're going to be there for you, to help answer questions, to if you have any concerns, that they're there to guide you, because that's what we do.
So we have a question here. It said, Matt mentioned that the longevity is an asset. Is that longevity of the business itself or the particular ownership structure? I'm in the process of buying a business. It's nearly 30 years old.
Sure. So I guess the question back would be, is a business that you have been a part of and kind of breaking off and buying out one of the other owners, then yes, that would be something that they would see as continuous ownership. They would just see it as a change. If you're an employee of there and buying out, as an example, then they might see it differently. But the fact that it's been around for so long is something that would be definitely a benefit, but they will see you as a new owner if you haven't had that ownership piece there.
Sorry, go ahead.
Sorry, go ahead.
So it's her dad's, the dad's company, and she's been working there for 10 plus years.
Yeah. So okay. Yeah. So they, I mean, they definitely see that in a better light than they would if you were just breaking off. So it's a company that you have an intimate knowledge of, and understand the workings of it. It's obviously a long standing, so it's definitely seen in a much better light.
She said, thank you.
Yeah, no problem. All right, so the next piece is liability. So I guess I'll ask the question kind of again. Does anybody know what liability? What is liability? It seems to be one that a lot of people have a lot of misconceptions around of what it is and what it does. Does anyone want to take a shot at what liability is?
I don't have anyone here, but I do have a question. Do you predict the current contagious disease exclusion cause will be in place for the long term, or will it be integrated into the usual liability coverage? The buyback is very expensive, but definitely essential for smaller NFPs.
I think that's a tough one. I have a feeling from the way that a lot of the insurers have kind of responded to it, that it might be something that's there for the long haul, but we don't know. There's been some lawsuits, mainly in Europe, in terms of the infectious disease and where it falls, and if there's any payouts, especially under business interruption. And it's a moving target right now. So it's a hard one to kind of pin down of whether it'll be there for the long haul or not. I would say probably right now it's kind of looking like it might be, though.
Also, to everyone, I will send you Matt's information. So if you wish to reach out to him, you're more than welcome to do so on a personal note too, for your business. They said, sorry to put you on the spot. LOL.
Yeah, no worries. I mean, that's what it is. I mean, that's probably one of the more difficult questions to answer right now, because everything's still in motion as to what's kind of going on with it, and what it's going to kind of look like in the future. But I know my feeling is it seems like it's probably going to be an exclusion that's kind of built into policies moving forward. I mean, it is, they've already put it into most of them, but I would say it's probably looking like it's going to be there for a while. That's for sure. Right. So, and no one had a go at what liability is. So liability is basically where you have a duty of care, where there's a duty of care that exists, there's a breach of that duty, and that breach has resulted in an injury. So what it is the state of being responsible for something, especially in law. So basically it is if you're supposed to do something, you fail to do something, and that failure causes someone to be injured, that's where a liability claim comes up. So the first piece of that with commercial is commercial general liability. This is designed to respond if you're found liable for bodily injuries or property damage to a third party. Bodily injury is if someone is injured on or off the property and you are found liable for that injury. Property damage is damages made to a third party's property. And product liability insurance is if you make or sell a product, you're responsible for that product once it leaves the store. Liability examples, the most common obviously for bodily injury is slip and falls. That's what you see especially on a lot of small businesses with brick and mortar, is slip and falls, whether it's inside the store or just outside on the sidewalk or something like that. Property damage, example of that would be you're a plumber and working on a house, and the work that you have done fails and the house floods, then it's going to be something that's coming back onto your liability likely. Or example that I have here is if you're doing work in someone's house and drop something heavy on their hardwood floors and you damage the floors, again, that's where that could possibly come in. Or loading something into someone's car, work at like Rona or Home Depot or something like that, and you're putting wood or something heavy into a car and you do damage to the car, then that's where property damage falls in. Product liability, you make topicals, lotions, body lotions, and all of a sudden people start breaking out in rashes because of your product, right? That's where that comes back, and that's product liability. Professional liability, which is also known as E&O coverage. This is designed to help professionals protect themselves from lawsuits. If you consult, design, provide any type of service for a fee, you should have this coverage. And this is obviously big with like engineers, right? Engineers have E&O coverage. Insurance brokers have E&O coverage. This time of the year, tax, right? The consultants have E&O coverage because they are offering their services for a fee. If a client suffers a financial loss because of an error in your work, this is where an E&O policy comes in to pick up. How to mitigate your exposures, have procedures in place for all of your employees. Again, document everything. If you have a brick and mortar location and you are responsible for the snow removal, every time it snows, every time you put down salt, have a little log. Say that, 9 o'clock this morning, shoveled the driveway or shoveled the sidewalk and put down salt. And it's something as simple as that, that's in a log. So if someone comes back 6 months later and says, I slipped and fell out front of your establishment and there's going to be a lawsuit, then at that point in time, you can come back and you can show that you've done what is necessary to help prevent that. Also having an understanding of who's responsible for what. Different leases stipulate different things, whether the landlord is responsible for the salting and the snow removal, or if it's the responsibility of the tenant. That's a big one. Any questions about the liability? I know it's very exciting stuff, the liability. So property risks. So that's the next piece of it. One of the biggest, I guess, issues that we kind of have in terms of property is having people insure their property to the correct values. A lot of people would like to insure the property for the selling value. Well, insurance, it doesn't work that way. And it's funny, depending on kind of where you live, people look at it kind of differently. Was dealing with a property in the GTA yesterday where the selling value of that building was somewhere around $1.5 million to $2 million. Well, the rebuilding cost of that property is about $600,000. So if you're in a place with a higher market, then so sometimes they kind of look a little bit differently. We're often, in a more rural area, the rebuilding costs can be higher than what the actual selling. They're like, well, if I have to insure my place for 600,000, I can only get 500,000 for it. I'd love to get that 600. Well, unfortunately, it doesn't work that way, right? We have different kind of evaluators where we can plug in all the information about the building, and it gives us an estimated rebuilding cost. And that's what you should be insuring your property for, is what the rebuilding cost is. The most policies have a co-insurance clause. Often it's 90%. So in this example here, the basic formula is did divided by should times the loss. So in this case, you insured the building for $200,000. You should have insured it for $300,000. The 90% is 270 times the loss. So if the loss was 100,000, in this case, you're being penalized the better part of $26,000 because you didn't insure the property properly. Right? Most insurance companies have this built in, and it's called co-insurance. If you have a policy, have a look, see where your co-insurance policy is, or what your co-insurance limit is, and it really drives home the fact that you might save a couple of dollars by underinsuring a building on an annual basis, but if you have a loss, that savings is gone in a heartbeat. It's incredibly important to insure your buildings and property to value. Tenants improvements, leasehold improvements. This is another big one that a lot of people have misconceptions on. So does anyone know, if anyone on the line is leasing a property, do you know what you're responsible for in terms of the tenant improvements? If you do a build out on a property and you take a new place, you do renovations, who's responsible for what? Anybody? All right, so generally, you're going to be responsible for anything from the studs out. So
I have a comment here. It says we are responsible for everything inside.
yeah, generally from the studs out, you are going to be responsible for. So it's not on your landlord to do that. So any kind of improvements that have been done, the fixtures, drywall, any of that kind of stuff, the cabinetry, that all goes under your tenant improvement limit. And a lot of people don't understand that. So again, it's important that you have someone who can explain what these different coverages are and why they're important to you. So the person who answered that's it's exactly what it is. You got to kind of think about it from your studs out. That's your responsibility. Equipment breakdown. Equipment breakdown is something that is a lot of standard policies will be automatically built into it. And basically, if it plugs into the wall, you have an exposure. So equipment breakdown is equipment that breaks down. Usually it is due to like a blackout or a surge and shuts things down. If you don't have equipment breakdown coverage and there's a power surge and something breaks down, then there's no coverage for that. Okay, you have to make sure that equipment breakdown coverage is there. Another important piece is equipment versus tools. Equipment is generally items of higher value, $1,000 and over. Tools are kind of under that. And there's two different ways of kind of scheduling or insuring those types of property. One is blanket coverage, which means you say I have $10,000 in tools, then it's a $10,000 blanket that drops down over top of it and everything kind of falls in there. Often they'll have wordings in there that say if a tool or equipment is over a certain value, then it needs to be removed from that blanket, or you can schedule things. If you have a detailed list of what your equipment and tools are, you can actually have like like an Excel sheet and have the make and model and the value, and a serial number if there is one for it, and have a detailed list and present that, and the insurance company will insure it for those values, and that's called scheduling your coverage. So you can blanket or you can schedule. So schedule is much more specific and it shows an exact amount for each thing. Scheduling is a little bit more work, but in the long run, it tends to be better coverage as well, because you know exactly what you're insuring. Any questions in regards to property? Nothing. All right. Business interruption. So this is a difficult one. This is one that a lot of people don't understand very well, and what it is and what it does and why you need to have it. Business interruption needs to be triggered by a loss that would be covered under the wordings of your policy. So back to one of the questions earlier in terms of COVID, and how that has been handled. You can see down at the bottom here, we have an infectious disease coverage. So what we put on there is that coverage is dependent on each company's wordings, and it very much is. In saying that, there hasn't been a lot of companies that have paid out for business interruption due to the pandemic. Generally, what it is if your business is interrupted, let's say for a fire, there's a fire at your location and you're not able to operate. At that point in time, your business is interrupted, and that's where this coverage kicks in. Profits, this is based on prior month's performance. A policy will provide reimbursement for profits that would have been earned had the event not occurred. So if you're down for, let's say, 6 months, a lot of business interruption policies have an indemnity period of 12 months. You can get them for longer, but usually the basic coverage that comes with the policy when you have business interruption is 12 months. So as long as you're back up and running and back up to where you were prior, you have that 12 months to do so. So profits is paying those revenues that are missing that you would have received. Fixed costs, these can include operating expenses and other incurred costs of doing business. So these are things that you have to continue to pay on a monthly basis. Temporary location. So if you are able to take your business and say move it across the street to a temporary location while your place is being repaired, then they will at times pay for that. Again, it depends on the wordings of each policy, but it is something that you can find in there. Commission and training costs. Wake of business interruption event, a company will often need to replace machinery and retain personnel on how to, retrain personnel on how to use this machinery. A lot of policies will come in and pay for that as well to help with the retraining. Extra expenses. Business interruption insurance will provide reimbursement for reasonable expenses beyond your fixed costs that allow the business to continue operating while the business gets back on solid footing. There are a few different versions of business interruption coverage, and each one kind of pays out in different ways and covers different things. So you just kind of look at what's there, and if you have it, because it's not always included in the policy. So you have to make sure that it is there. It's very important coverage. Does anyone have any questions about business interruption? Okay. The next one that's a growing kind of concern for people is cybercrime and cyber policies. These are probably the fastest growing source of claims in the insurance world at the moment. And basically, anytime you turn on the news, you're hearing about cyber crimes of all different sizes. The cyber criminals are going after everyone at the moment. They've actually kind of shifted a little bit away from, it used to be that they would just go after large companies because those were the companies that were able to generally pay out larger sums of money. And I think what they found is that that tended to be difficult and time consuming. And a lot of the larger companies started to put up better, better firewalls and better protections around their cyber exposures. But a lot of small businesses haven't. And now they just fire off all of these things and try to dig into people's systems. And now they're doing it like kind of little pieces. Instead of taking a big chunk, they're doing little ones, and I'm assuming it's becoming more profitable because it's increasing. In 2019, 3 in 4 Canadians were affected by data breaches. So it shows the severity. I mean, some of the companies, what they'll do is if you have a company, they'll use your company name and personal name, and they'll do research, and they go into the dark web and have a look to see where you are, if your stuff has been breached, if your information is out there. And they said you'd be very, very surprised to see how much information is out in the dark web about people. That's for sale. Passwords, all that kind of stuff, usernames, all that stuff is sitting there. And if they want it, it's there for sale. Like I said, they've started to target smaller companies. The coverages that you can find for cybercrime, things like data breach, business interruption. So if your system is hacked and you're down, your business interruption coverage under your regular CGL policy does not respond to that, unless it's built into the wording somewhere. But if it is, it's usually just a small kind of offset sublimit that's there. You need a dedicated cyber policy that looks after your business interruption. Social engineering. Social engineering is things like you get an email from someone saying, generally this happens with larger kind of businesses, from your controller saying, we need to update your banking information or change something, and you send it to them without checking where that email actually came from, because they are copying names, email addresses, things like that. And so the email will on the face look like it's legitimate email until you kind of dig into it a little bit, and you send your banking information, and all of a sudden you have money missing from your account. That's one of the things with social engineering. The 5 most common kind of cyber attacks are distributed denial of service. What that is when they kind of go in and fill up the system so that it appears to be busy and does not allow legitimate traffic to get into your sites. Malware, that's kind of like the bugs that kind of go in and infect the system. Man in the middle, that's going in, sitting and reading what's going on in correspondence. They sit basically, like it says, in the middle and take the needed information that they're looking for. Phishing, these are the ones that you probably get on a daily basis in your email. Click on this link, or text messages all the time. What did I get one from CIBC last night because of my bank account is something, and I don't have a bank account at CIBC, so just delete. That's phishing. And ransomware, that's when they take over your system and demand money back to unlock it. One thing in talking to some of the cyber insurers, they said like there's actually a fairly interesting code of conduct, I guess, amongst a lot of these cyber criminals, is that they're obviously quite intelligent people for the most part, and doing what they're doing, is that they've quickly realized that especially in ransomware, is that if they're demanding money and if they mess up and don't return your system as it was prior, or they lose stuff, then it looks bad on them and people stop paying. So it's a little different than your normal kind of criminal. And one positive thing with the cyber coverage is that it tends to be fairly inexpensive. Small businesses, was the one company that we have that they'll do them for as cheap as like several $100s for an annual policy, for a cyber policy. So depending on a lot of different things, but it can be very inexpensive to get a cyber policy, and they protect a wide range of different things. Does anyone have any questions around cyber? This is one that I mean, whether you have an agent now, a broker or whatever, this is something I implore people to talk to their brokers about. It's incredibly important. It's becoming massively important for all businesses. Doesn't matter how big or small you are. It's really kind of the future of what's happening, and people are losing a lot of money off of cyber attacks. And the final piece is commercial auto.
We do have we have a comment, just a comment that the cybercrime component is extremely expensive now.
The coverage?
I'm gonna assume that's what she means.
It depends on what kind of business you're in, but it can be quite inexpensive. I mean, I haven't seen a large increase in my cyber policies and my renewals that have been going out. So, I mean, it can be, but it also depends. I guess if you're doing a lot of online things, if you're computer oriented business, then it can be expensive. But for the average kind of small business, it tends not to be very expensive.
She said yes, she was talking about the policy. So probably the premium was probably
okay. Yeah, it's just say we for small businesses, we have companies that will quote for as low as like several $100s, a year. It can be quite inexpensive. I mean, there's obviously a full gambit of what you can see. And like I said, it depends on what the business is, but the general small business, it tends not to be all that expensive.
Okay, she hasn't said anything else, so I think she's
okay.
I think she's done. All right, I'll let you know if there's more.
Sure. So then the final thing we're going to talk about is just a commercial auto. This is another one. And most people who pay attention to the news and whatnot know that it prices and tend to be going up in this space. If you're using your vehicle for work, that vehicle needs to be rated as such. Sometimes, like for myself, my vehicle, because I'm on the road quite a bit, isn't rated commercially. It's rated as business use under a personal line policy. But once you kind of like you're a contractor, if you start carrying tools, things like that, you need to have your policy rated as commercial. If it's not, then you run the risk of worst case scenario, having a claim not covered because you didn't report your vehicle the way it's supposed to be. If you have a heavy vehicle is generally seen as 4,500 kilograms and up. Dump trucks, long haul trucks, things like that. Even some of the larger, like the larger F-350s and things like that, you have to watch where they are in terms of their weight, because they can get up there as well. Some of them are quite close to being up to that heavy vehicle designation. One thing that's happened is that their restrictions have increased with this. Most markets now require drivers to have proof of 3 years experience in the same like vehicle. So if someone's been driving pickup trucks for 10 years and then all of a sudden is now driving a dump truck with no experience, that person is going to be difficult to insure. There are very few companies, facility is likely their most likely option for a few years until they have that experience. But the most companies will not allow a driver without that 3 years experience with the same like vehicle. This causes a tremendous amount of headaches for business owners because there seems to be a fairly rotating slew of drivers that kind of move around. A lot of companies lose a lot of drivers on a fairly expedited kind of, I guess, rate, and they're always trying to replace and grow, and they're needing to find that fit into this box that the insurance wants. Unfortunately, for the most part, there's very little we can do about these requirements. It is what they want, and without it, they won't allow the driver to be added or won't quote new business. Commercial trailers are charged separately. The liability doesn't automatically extend like personal. So if you have a personal auto policy and you pull a regular trailer, and that trailer comes unhitched and runs off the road and hits somebody or something, then that liability automatically transfers over from your auto policy. If it's commercially related, it does not. It needs to be rated separately. The property in your vehicle, often another misconception, that property that's in your vehicle, your car is stolen, and all of a sudden you have thousands of dollars of property that's from your house, that actually falls under your house policy and not your auto policy. Two different things. And the importance of reviewing optional accident benefits. This is an important thing to do, process when you have an auto policy. We have a list and we go through that list, and it's got all the different things that you can add. They're optional. Some of them are highly recommended. Some of them are, it's obviously your choice. But those are very important to review with your broker. And the last piece is to make sure to list all licensed drivers that are in the home or business who have access to the vehicles. This is incredibly important to make sure that there is nobody left off of your lists.
All right, we have a few questions, Matt.
Sure.
If you have an employment contract that states you must have a reliable vehicle, but you do not necessarily use it for work purposes except running errands or conducting client home visits, etc., do you have to insure as business use?
Yeah, I would say that I would, if you have a contract that's similar to that, I would reach out to your agent or broker and have that conversation with them, and they can ask this company that you're specifically with how they would handle that. I know that generally the difference between, like, there's a little bit of an increase that there can be for business use rating, but I mean, when I switched mine, it wasn't like a holy cow like kind of thing. It was, I don't even think there was one, or if it was very minimal. But yeah, that's a conversation you should have, because every insurance company will look at it a little bit different. So if you have a contract like that and you're doing that, I would reach out to your broker and say, this is what I have. Can you please see if it's okay with the insurance company? If not, what can we do?
They said thank you. And then I'll give another question. Would you classify a small cargo trailer 6x12, e.g., a commercial trailer?
I mean, it's trailer. It's what it's being used for. So if you're using it for work, you have your tools in there, you have equipment in there, then yes, it's a commercial trailer. And you're using it to move from your house to your work site, or from your work site to another work site, then yes, at that point in time, it's a commercial trailer.
I don't think I have any more questions.
All right, so that's basically the end. How are we doing for timing there? Oh, pretty good.
Yeah, doing pretty good.
Yeah, nice.
We got thank you and thank you very much.
Perfect. Yeah, so if there's anything I can do to help you, feel free to reach out. I'm also on LinkedIn as well. Pretty active on there, so more than happy to assist anything people need.
If you guys have any questions at all, once this recording is downloaded, I will send you Matt's contact information.